Hi, folks, and welcome to another session with yours truly, Ian Giffen, on behalf of GoPro Trading Academy, where we go through all of the instruments that we traded last week, look at everything that we did, as well as give you guys some kind of an outlook for the week ahead. So remember, if you haven't yet subscribed to our channel, we bring out professional training material on a regular basis. Please make sure you hit that subscribe button and the notifications bell as well, so that you know when we've brought out our latest material. And yeah, if you've got any questions for me, please feel free to pop it into the comments below, and I answer every single one of them. All right, so before we actually jump into that, I want to say that we're coming up to the end, obviously, of November, this Friday being non-farms, and I count my month from the Monday after non-farm payroll to basically the following non-farm payroll. And that's coming up this week. So we've had 3 weeks of the month so far, coming up to the end of November, and it's been a reasonable month. Can't say that we're complaining. We've got one of our, let me just show you the stats here for one of our newer members who've got their funded account. This is the evaluation account, their $10,000 live money account. And they didn't start off too well. They struggled a bit with the transition to live money, but certainly I think through the course of November, they found their feet and have pulled themselves back with about an 11% return, if you were risking 1%, that is. So not bad at all. We can see the convexity of the strategy coming through as well, with about a third of the trades, well, just over a third. No, there we go. Just over a third of the trades being won, which means that 2/3 of the trades were either break even or lost. And yet it was very profitable, as you can see, over that time period. So this is one of our most important core strategies, and it's very effective, especially when we get some directional price movement. Speaking of which, let's have a look at what the markets have done or did last week. So starting, as always, with the Euro USD. And you can see that last week on this currency pair, the weekly candle is a low test, a bullish low test, in fact, or hammer candle. So not much really happening here on the most liquid of all of our currency pairs. And you can see, though, that that largely came about on Friday. So with some quite big news coming out regarding the new COVID variant, a lot of the markets moved quite dramatically. Some of them showed a reversal, others a continuation. You'll see that that actually worked in our favor overall. But this is an example of where one of our trades that was running actually got stopped out at break even. So we didn't make any money on that in the end, but we don't mind, because we trade a basket of pairs that are non-correlated, and others did. All right, so that was an H4 impulse, by the way. Looking at the cable GBP USD here on a weekly, you'll notice that the weekly candle is completely different on this currency pair. Dropping down to the daily time frame, you'll see there was something of a reaction on Friday. It's still a bullish engulfing candle, but nothing like that on the euro. But I know a lot of you folks were in a bearish daily impulse on this, so well done on that, because that worked out very nicely last week. And you may well have caught a couple of, or at least one H4 impulse on that as well. But again, Friday sort of pulling back, and if you were using advanced targeting and a trailing stop, you probably took profit on that one. Moving on to the Dolly Yen, nothing much happening here. We've got that bearish engulfing impulse candle, which again was all Friday. You'll notice again that we did also have a bullish H4 impulse here, also got stopped out at break even, another one which didn't work out, but we didn't lose anything. And you know, this is a perfect example of the one side of the coin when we talk about convexity and limiting downside and maximizing upside. When we get these big moves and it goes against us, we lose very little, if anything. But when it goes in our favor, we stand to make, and we do make a hell of a lot. So moving on to dollar Swiss, the Swiss franc last week, I think with this reaction probably being the strongest, or one of the strongest currencies out there. And again, you can see a strong bearish inverted hammer on the weekly time frame, all of which again was Friday. And another example, by the way, of where things turned around for us on this one, we have had a few trades on this, but actually nothing worked out on this currency pair for us during the course of last week. So again, you can see these dollar pairs weren't really our friend through the course of last week. USD CAD, we didn't have anything. You can see here on the weekly time frame, we're very much inside of the channel, but there you have an example of a bullish impulse candle, very strong candle. And here you can see a continuation of what we had previously. So on this one last week, we had 1, 2, 3, 4. We had a winner and a loser. So bearing in mind that our winners are always bigger than our losers, this was a profitable pair for us. What's not showing over here is that we also did have a hybrid setup, and that obviously would have taken off. If you're using the aggressive trailing stop on this one, you would have been taken out for a decent profit this morning with a bit of a gap over the weekend. So again, if you're trading hybrid strategies, that would have been a winner for you. Here we are on the Aussie. You can see we've actually got a small trade running. Let me just bring up the market watch just to check on where we're at here with our spreads at the moment as well. Liquidity back in the market. All right, so the Aussie pair, looking here at the weekly time frame, you can see that not much happening in the early part of this week, but last week's bearish impulse candle, very strong, looked like this on the daily time frame. So plenty of opportunity to trade here. Not sure why some of the trades aren't showing, but there were a few setups to short this on the H4 impulse. So for those of you especially who are trading the H4 impulse, then we've had valid class 1 WM patterns for quite some time. Likewise, you would have had a channel breakout already last week, and this has just been an ongoing opportunity to trade. So plenty there. You can see that there's currently a trade running. Not doing that well with this gap over the weekend, and they opened it today, but the trade is still live, and we're almost at break even on this one. In fact, in the next hour, no, actually it'll be the next 4-hour candle, it'll be trailed to break even. We'll be fine with that. If it does lose, but there's plenty of potential for this to continue. You can see that with our current reward to risk ratio on this, we really don't mind. We keep taking those trades all day long. All right, you'll notice that we've got a matching trade here on the Kiwi. So looking here at the, let me just get my dimensions right here with this market watch. Let's crunch it up a little bit. So again, last week, very strong bearish impulse candle breaking below the previous support level. But having said that, it is coming down to the next more significant support level, which is the bottom of our HTC channel here on the weekly time frame. Again, very strong movement here on the daily. We've had 1, 2, 3, 4, 5 of these candles were impulse candles. We've had a winner on this, as well as, I think, maybe let's just have a look at the H4 time frame. Yes, there was a winning trade there, and this is the current trade. So this trade was entered shortly after that. Again, didn't make it to our take profit as yet. We are at break even on this one already. Again, that gap over the weekend, bringing it a little bit up again, but we really don't mind. As I say, we take these trades all day long. Even if we only win a third of them, we were still very nicely profitable. Okay, so Euro Yen, you can see we've actually got a new trade this morning on this one. Here on the weekly time frame, though, you can see that this is Monday, and our weekly candle has got off to a roaring start. So dropping down to the daily time frame, you'll see exactly what I mean here. Now, we already had a winning trade. I think it kicked in on Thursday, hit take profit on Friday, and we're immediately into another one here on an H4 impulse. Not a bad setup. The only problem with these, of course, is that we get a lower reward to risk ratio, about 1.5 to 1, which is our minimum, where we use an ATR stop instead of that fractal stop. But that's really because of the size of the move that we've had so far today. And of course, we'll just use our trailing stop methodology to reduce risk on that aggressively. So let's see what happens. Right, moving on to the other yen pairs here on the GBP yen. You'll notice again another strong bearish impulse candle, but here on weekly, still inside of the channel. We're looking for a potential M pattern sometime in maybe by the time we get to January, but we'll have to wait and see if that actually does transpire. But in the meantime, we did have a breakout here on Friday of our HDC channel. So those of you who are channel traders will be keeping a beady eye on this one. Let's just have a look here. In fact, we just missed the entry on this one. without that being an impulse candle this morning. Similar sort of picture there as to what we saw on the euro yen. But again, we've also got a limited budget for our risk, so make sure you don't overexpose. Right, Swiss yen, nothing much here. I mean, here on the weekly time frame, we're in a retracement or phase 2 wave. Last week's candle closing inside that HDC channel, not respecting that support level. Still potential for a hybrid here on, well, this is the selection time frame with daily as our execution time frame. But bearish cyclicity still intact. We'd have to wait and see. There's a possibility, unless, of course, that we get a continuation of this bearish move. If we have a reversal pattern inside of this execution time frame, then certainly we'd be looking to go long with that class 1W pattern on the weekly time frame, but nothing else there for us. Right, Cad Yen, similar picture, stronger bearish move over there with the Canadian dollar weakness being an oil-based currency. I'm assuming you'll see that Friday, the CAD weakness is rather than really the yen strength, putting in quite a strong showing there, which obviously means here with the selection time frame on daily, for the channel traders, this is very much a bearish breakout. So if you are looking for a class 1M pattern, then we don't have that yet. You'd need to bide your time. Of course, that would be a more conservative approach to your trading. Aussie yen, also you can see we're inside the channel here on a weekly, but very strong bearish move overall, with all of these last 4 candles being bearish impulse candles on weekly, meaning that on daily, we've had this nice bearish cyclicity very much intact. And of course, again, Friday with that strong move there, Aussie weakness, yen strength, making this for channel traders in particular a valid pair for you to keep a lookout for execution on the H4. Last of our yen crosses, same kind of picture, pretty much exactly the same thing here. The only difference is that this is actually a valid class 1M pattern and has been all along. So I know that a few of you folks would have taken, I think we maybe needed to have updated some of this analysis over here. So if you're wondering why I haven't, that's a good spot. Well, actually, no, this is exactly right. We can't take, that's non-relevant. So this is a continuation of the bearish phase 1 impulse wave. So you should have been trading that already last week and may well have got a few trades on that, all of which would have won. If you were trading this with a trailing stop, you would have done pretty well. Looking at H4, let me just double check as to where we would have started looking for this. Certainly there on the 25th. Looking back here, 24th. There we go. Perfect little setup here. You would have taken, you would have shorted this market without a shadow of a doubt. This is a nice class 2, might even be a class 1M pattern. Shorter the markets using the 3-6 trading stop rule, you'd actually still be in this trade. If you're using aggressive trading stop, then you'd probably exit this trade either late on Friday or you would have exited first thing this morning. And that would have been a very nice trade with possibly around a 4-to-1 reward to risk ratio. Right, so that's the yen crosses. As you can see last week, with this directional bias, really giving our core strategies a chance to flex their muscles. Euro GBP here on weekly, another, just a reversal with the last week's candle closing back inside the HTC channel. Very weak bearish cyclicity over here, which of course is not acceptable for us on a selection time frame. Here on the daily time frame, last week, 1, 2, 3, 4, 5. So Monday, in fact, was the low that was ultimately ringed. On Tuesday, we didn't have any trading opportunities on this at all. If you are a WM pattern trader only, then I guess you'd be looking for a class 1M pattern during the course of this week. But bearing in mind that that is still inside of the channel. Right, Euro Swiss here on weekly, you can see that last week, another bearish impulse candle, just a continuation of this extended weakness on the euro relative to the Swiss franc. And as I mentioned earlier, the Swiss franc showing quite a lot of strength, it has to be said, certainly with being treated as kind of a safe haven currency, if you like. So if you're using that as selection time frame, you'd be looking on the daily time frame for execution, and unless you were already in a trade, then certainly a valid daily impulse there at the close of Wednesday. You've got in on the open of Thursday, you'd still be in this trade and just managing your risk on that. So this bearish trend obviously representing that wave on the weekly time frame, still very much intact. Class 1 M patterns all the way down ever since we had that previous breakout. So yeah, this has never been my favorite trading pair, as you guys know, but certainly over the last while, it has been very tradable. Euro CAD, not so much. You can see on the weekly time frame, bearish engulfing impulse candle, bullish, I beg your pardon. Did I say bearish? A bullish engulfing impulse candle, and a close above the previous resistance level as well here on weekly. So phase one, strong reversal pattern there, completely disqualifying this pair for us to be able to do anything on that. All right, so you can see that Friday it actually managed to just close outside the HTC channel, but the gap over the weekend back inside. So respecting that channel boundary for the meantime. Again, not one of our commonly traded pairs. Euro Aussie here on weekly, again, strong bullish impulse candle. All of these, of course, coming through on Friday with a single daily move, really one day candle forming all of these weekly candles, break outside of that channel without a shadow of a doubt. And again, now we're looking, if you're a channel trader, you'd be looking for a setup on this, but I doubt anything's happened today with this, these three bearish candles, absolutely nothing valid at the moment. But should you get a bullish impulse candle here, then it would be A4 away. If you are a WM pattern trader, you'd be actually biding your time, waiting to see a retracement wave here on the daily time frame, and that retracement wave coming to an end before you'd look to trade this in a bullish direction. So depending on how conservative you are with your selection criteria, and obviously here I'm talking all price action based selection criteria, depends where you are on where you're at on that conservative to aggressive risk continuum. All right, Euro NZD, again, strong bullish weekly candle, all transpiring pretty much on Friday. Strong breakout here. Same kind of picture as Aussie, same setups that we're looking for in the Euro Aussie. Yeah, Euro Aussie. So, you don't want to overexpose. Be careful about that. But you are definitely looking to take trades with daily being your selection time frame on some of these Euro crosses, particularly Euro Aussie and Euro Kiwi. Right, moving on to our pound crosses now. Breakout, as we know, we would have mentioned last week that we closed back inside of the channel marginally, but it ultimately has respected that as a resistance level. That high being ringed, most definitely. Anyone looking to trade the hybrid strategy would have been here on the daily time frame, looking for the breakdown in that cyclicity. But unfortunately, we didn't actually get a setup candle. We got everything except the bearish impulse candle until we got Friday, obviously, and that's an overextended candle, so no trade there. However, it is still quite a strong bearish move, and should we get a phase 2 being ringed over here, assuming that it stays outside of the price territory of that wave, we'd have a valid class 1 M pattern, and as long as you're not looking for a breakout of the channel, you'd be able to short that. Otherwise, if you're using this as a selection time frame and want that channel breakout, you need to bide your time, because so far that support level has been respected. Right, GBP CAD. So again, yeah, you can see that bullish, strong bullish weekly candle over there. Just didn't make it into being an impulse candle, and that's because on the daily time frame, you can see that the latter part of last week, we actually had quite a strong pullback with a single candle wave forming again on Friday. So there you have that Canadian dollar weakness showing itself again. You know, the oil prices and oil-based economies are heavily affected by bad news. All right, so GBP Aussie on the weekly, strong bullish impulse candle on the weekly time frame. Nothing else there. There's no valid WM pattern, and we're inside of the channel, but it's worth noting that. And again, it's all on Friday. So you can see the pound strength over here relative to the Aussie dollar, giving us that breakout of our HTC channel. No valid pattern as yet, but who knows? We may well get that through the course of this week. If you're purely a channel breakout trader, here you have yet another potential setup. Gbpnzd, same thing. You can see that there's an additional Kiwi weakness coming through. This is a valid W, class 1 W pattern, as many of you know, because you were trading it all of last week. So we had quite a lot of activity on this one. You can see that if you were purely, let me just go back to weekly, you can see we're not trading anything with this as selection time frame. But if you're using daily as selection time frame, you would have been looking for trades all the way through last week, starting probably from Tuesday. So dropping down to the H4 time frame, lots of nice little setups over here, which you could have taken advantage of. And if you were trading using advanced targeting, particularly if you're using the 3-6 rule for that, then you may well still be in your trades for this. But we might be seeing something of a pause in that, and you may well be taking the profit off of the table through the course of today on that one. Right, so moving on to our other crosses, Canadian dollar weakness again, in this case combined with Swiss franc strength, obviously showing itself with a very strong weekly, bearish weekly impulse candle. And you can see that of all of the things that we've looked at, that, I mean, Friday was quite impressive across the board, but this really does take first prize for the most extended candle, thanks to that news. And you can see there, that is because the Canadian dollar was the weakest currency on Friday and the Swiss franc was basically the strongest. So putting back today, definitely a breakout, no valid M pattern yet, but should we get a phase 2 here, ringed outside of that price territory, you'd have a class 1 M pattern on the daily time frame. Nothing yet this morning, but should you get, if you're just a channel trader, should you get that bearish impulse candle, you'd be looking to short this game. Aussie Swiss, the last of our Aussie crosses. Here you can see that Swiss franc strength in the weekly time frame with that strong bearish impulse candle, all on Friday. Almost the same picture. So just waiting for an end to this retracement, if that actually happens. Aussie Cad, you can see there, you know, the Aussie not being not the strongest of the pairs, but certainly you can see how, if anything, it's weaker than Canadian dollar through the course of last week. Let's just have a quick look at the daily time frame, except for Friday. So you can see how on Friday the Canadian dollar weakness showing itself again. Now this is a valid breakout. It is also a valid or potential class 1 M pattern. Now we're treating this bullish candle as a single candle wave because it is engulfing. So if we get a rollover on this, then this ticks all of the boxes for WM patterns as well as channel breakup. Getting to that next pair. Aussie Kiwi. And yeah, there you have pretty obvious ranging markets on the weekly time frame. We had another bullish engulfing candle here, though, which shows quite a significant difference between the Aussie and the Kiwi, showing the Aussie strength and the Kiwi weakness across this relatively correlated pair, but not so much at the moment. So on the daily time frame, you'll see it's been pretty choppy over the last while. Not much of a difference on Friday. You can see that the two showing a bit of correlation, but on Friday, you can see how the New Zealand dollar actually showed a bit of strength relative to the Aussie. Nothing doing for us. We did get a close inside of that, so there's no, at best, it's a class 2 W pattern, so we're not trading that pair at all. Kiwi Swiss, there you can see that Swiss franc strength coming through on Friday, forming that very strong bearish candle, both on the daily and weekly. So again, for channel traders, purely channel traders, you'd be looking for an opportunity to short this using your strategy rules, but nothing as yet. Typical Monday activity at the moment. And here you have New Zealand dollar, Canadian dollar. So similar kind of picture on weekly. That breakout that we had last week was absolutely tradable, although I don't think really anything happened here. If you're looking for a class 1 M pattern, we're waiting for a ringed high before we can do that, or to trade that with an impulse strategy. But if you're trading the hybrid, the H4 hybrid, then you're keeping a close eye on this bullish cyclicity And should this break down, in fact, even right now, should we get a bearish impulse candle over here, you'd be looking to short that with your hybrid. Right, so that's the currency pairs. A quick look at gold. Weekly, you'll see that bearish candle there showing activity to the early part of the week. Nothing much happened on Friday. So the US dollar and gold and the yen and Swiss franc all being pretty much safe haven destinations. So quite a lot of correlation showing itself here on gold with the US dollar. And as we know, the stock markets have taken a bit of a tumble with bad news, as they always do. Strong bearish candle there on the Dow for the week, which again was all Friday. So let's see if we get continuations of all of these moves this week. Certainly, that's what we are looking to trade as a rule. The S&P not looking quite as bad. We're still outside of the previous phase 2's price territory, so we've still got a potential class 1 W pattern here, but that is a bearish engulfing candle as well as an impulse candle, so we're already treating that as a bearish wave. And you can see again, that was all Friday, but the bullish cyclicity absolutely broken down. And yeah, we need to see that bearish cyclicity come to an end with a resumption of bullish cyclicity before we could do anything to go long. But if you're trading this short, well, there is a potential for a class 1 M pattern, but we'd need to have a ringed high here outside of that wave's price territory before we'd be able to take advantage of anything like that. And finally, on the NASDAQ, similar, as you know, this is a bit of a leading instrument, always sort of leads the way as a rule. Still pretty strong here when it comes to the overall bullish picture on the weekly time frame, but we can't ignore that bearish engulfing impulse candle either. And there is this breakdown in cyclicity. If you're trading any of our overlay strategies, you may well be short on this as well. All right, folks, well, that's it from me. Those are the main instruments that we like to look at in our market review. I hope you found that useful. If you have, and as I mentioned earlier, want to take advantage of the free trading that we bring out on a regular basis, then make sure you subscribe to our channel, hit that notifications bell. And remember, if you've got any questions for me, please pop them into the comments. I do answer every single one of them. All right, so folks, have an awesome week trading. We'll chat later in the week. Bye for now.